It feels like a Monday. What day is it? It's crazy. Must be oil inventories day. December 9th, 2020. Let me mark this and let's get on with it. Welcome, welcome, welcome. And again, happy Wednesday. It feels like a Monday, but happy Wednesday. Let's go! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I'm a currency trader just like you. I've been sitting in this chair, not necessarily this chair, but in a similar chair, in a similar circumstance, for almost a couple of decades. And guess what? I still like it. I used to be a venture capitalist. That was cool. That's what I thought I'd be doing the rest of my life. I was offered a VC role just a few months ago to be a general partner in a new firm in the Silicon Valley, and I'm like, no, not really interested. Thank you. It's not nearly as cool as Forex. Like, no joke, not even close to being as cool. These VC firms are almost degenerate gamblers in comparison. So very cool. I like what we do. I like who I am. I like who you are. So let's just focus on this thing called Forex. I'd like to share the years of experience that I have with the overriding goal of teaching you how to use technical and fundamental analysis and trader psychology and behavioral finance to put together trade plans for today, for this week, for this month, for next year, and for you to be an independent thinking currency trader, someone that makes decisions, and then one day can add value to a client's portfolio by providing a thoughtful and quality service. Hey, well, what about the get rich quick stuff? I'm sorry, son. That's not the right YouTube channel. This is Forex.Today. So this is my business. This is truly my office. And you need to treat Forex as a business. I'm sure the Bitcoin guy that drops F-bombs every 3 or 4 minutes and has funny little animations and stuff, he'll keep you happy. He'll keep you happy. But here, if you want to learn how to be a professional, here in the right place. Cool. So ask questions, get involved, take notes, document what you learned in the comments section in the recordings. And while you're here, please click the like button. It doesn't do anything for me per se, but it does tell YouTube this is quality content, and I'm just trying to spread the word. That's it. Cool. So guten Morgen. You need a broker, by the way. When you can't just click a mouse, you need the mouse to click a platform, and the platform sends information to the broker. The broker has to then send things out and find, through liquidity partners, someone to put on the opposite side of your trade, right? So that's why you need a broker. So why don't you consider Traders Way? Visit tradersway.com. They're excited to be a part of our educational community. They see this as a support forum, if you will. So they care about your success. They want you to succeed. And so now they're asking simply for an opportunity to earn your loyalty and respect. So you can visit tradersway.com. In the bottom right-hand corner, you can fill out a quick little form, take you just a couple of seconds to create an account, go in the back office, download MT4, download MT5, whatever you want, ECN account, fixed spread account, variable account. I go with the variable account. That's what I choose. And then see if you like it. And I think you will. Fast execution speed, check. Low spreads, check. Big swaps, check. World-class customer service, check. And above average looking children. Actually, I don't know their children. Okay, so today is an interesting day. So we're halfway through week 2 of December. And I said 9 days ago, since it's the 9th, actually I said it 10 or 4, let's say I said 2 weeks ago, I plan on being in all my trades. Oh, Mahir says, yeah, don't forget the half price commission on ECN accounts. So I don't use an ECN account, so I always forget that. But right now, Traders Way, I think it's still running. But to support their clients through COVID, they reduced their fees on the ECN account by 50%. Yeah, amazing. Anyways, thank you for that, Mahir. So what I said a couple of weeks ago is that I intend to stay in my trades based on time, not price. And people thought that was pretty interesting. They're like, what do you mean? What do you mean? So we're at this point now where I'm 1/3 of the way through December. And so now I move my stops. We'll get to this in a second. I just want to, don't forget. So I moved my stops. I've locked in 2,000 pips profit. And the reasoning for it is we're 1/3 of the way through the month. I only had planned to be in the trades for 2/3 of the month. So I'm halfway through my time target. And then what I want to bring up here, let's bring this back now. What I wanted to bring up here was on the calendar, as they say in France. I want to look at next week. Okay. Okay. See? So really, how far away is that? 1 week. So 1 week from now, the FOMC is going to tell us lies, tell us sweet little lies, tell us lies. So we're really only, we're not even, what I'm trying to say is we're more than halfway to my target goal, because really what I said is in years past, I've held on to more like the 20th, sometimes the end of the year, sometimes like a couple of years ago, it was the 19th. I'm looking at this now, and what I define as truly the end of the year is 7 days away. Okay? Mahai is saying like, hey man, I got a plan for next year stacking swing trades. Well, there's a way to do it, so you got to be careful. Okay, so anyways. So you see what I'm getting to? Like, to me, this is a technical time. The Fed meeting is really the end of the year. Okay? That's how I'm kind of looking at it. So I locked in 2,000 pips. I just wanted to, full disclosure on that. Cool. Hey, by the way, I thought of something this morning. And sorry for touching my face. I know I'm not supposed to be touching my face. I was thinking this morning, in years past, I've offered people annual memberships. And I haven't done that for 5 or 6 or 7 or 8 years. Would anyone consider an annual membership to a swing trading group if one was offered, if it saved you money? Or is that just, I don't even know. It was just popped up in my mind. I'm like, oh my God, I used to do that. So Mahai is like, hey, I got a plan for next year. Well, would you do something like that? I don't want to commit to it if it's only a few people. But if a lot of people are like, yeah, I'd do that. And no, it's not the cigars that make me cough. But really? All right, I'll think of it. Because everyone had to sign up for the courses. I'm wondering if you do that, maybe I give you the money back from the courses or something like that. But, okay, all right. Because we have to do it by the end of the year, right? So you might be able to use it as a business expense, and tax write-off, and all that kind of stuff. So, all right. I'll have to think about it. I'll have to think about that. Anyways, let's get back to this. So this is, to me, we're 1 week away from the technical end of the year. And then what you're trading after that is going to be a lot of central bank volatility. There's a lot of central bank stuff going on next week because they have to wrap up the year as well. And then after that, I'm not sure what you're trading. Probably not 2020 stuff. Like, for example, I could have a strategy right now that says I'm not going to get out of any of these trades that I'm open. Okay? Okay? Oh, and by the way, guys, thank you for the feedback on that. I appreciate that. And it also, it shows me your loyalty and stuff. So thank you for the respect. I appreciate that. Okay. I could have a strategy where I just hold these trades for forever, let's say. And therefore, maybe, excuse me, maybe as we approach the Fed meeting next week, you manage your stops. I pulled mine in pretty aggressive because I intend to get out and then I intend to get back in, right? Okay. So for someone else, they wouldn't lock in the profit. Instead, just kind of manage a little bit. Maybe they would manage December just like any other monthly swing. And then January will be January. And you don't even really have to think anymore, which is really nice because you say you're going to be in these trades for the next 5 years. Have you thought about that? Waiting for income tax, you file as self-employed? No, it's a company. Yeah. I own multiple companies. And then, since they're pass-throughs, then we pay personal taxes. Yeah. On says, a carry trade. Well, for example, that's a great one. Why don't we move over to exotics? So go back to what we were talking about, in the middle of the year. Okay, let's sort of do this. Okay, if you're short somewhere up in here, right, then I don't think I would ever get out, ever. Okay, if you're short here, if you're short sort of in here, I think what I would do is call that a COVID high at one of these levels. So let's say I was short here. I don't think I'd ever take profit. If I was short at 17, I think I'd jam my stop at -3 and never get out. Okay? Marino was born a day trader. Yeah, but this is a whole different thing. So, let's put this into perspective. Let's say you got $40,000 in an account. That's 4 standard lots. Let's do SD lots. And that's 40 mini lots. So a true carry trader would be really going for this because this is just too much risk. Okay? But it really depends. I mean, you could, but I wouldn't recommend it. But anyway, so somewhere between mini lots and standard lots. And the first objective that you would want to have as a true carry trader is sell, 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 whatever. You're doing your selling, and then it gets knocked out, and then you do some more selling, and then it gets knocked out, and then more sell, 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 sell. And then, half of them get knocked out and sell, 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 sell. What's your goal? Your goal number one is to get 40 mini lots. Okay, why? Because every single year you're going to be guaranteed 6%. Oh, is that right, Reb? Reb, email me an email. $137 million fraud. So I wonder what they're doing to fraud, because I thought they were selling you training courses. That's a big fraud, 137 million. Yeah, I wonder what that's all about. How'd you do it? I guess maybe when he is, I don't know. Interesting. On one side, it doesn't surprise me just based on the industry. But then on the other side, I can imagine they have tens of thousands of clients, of which most of them probably are not qualified to be doing what they're doing under their advice. And people bitch and moan and complain because they lost money. And they're going to say, oh, well, it was those guys that made me lose the money. But you know that the vast majority of those people lost the money because they're stupid. Oh, Morena, is that right? She says people copied the trades. Okay. So Michael, what I'm saying, Michael, is Michael's like the standard versus the mini. Imagine trade, 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 okay? And then knocked out, knocked out, knocked out, trade, 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 knocked out, knocked out, knocked out, knocked out, knocked out, knocked out, trade, 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 because then it rallies up, knocked out, knocked out, knocked out, knocked out, knocked out, trade, 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 right? Knocked out, trade, knocked out, trade, trade, knocked out, trade, 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 trade. Okay. And there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades open. You wouldn't be able to do that with standard lots because you can only afford 4. What's the likelihood those 4 are going to make mistakes, right? Then you say, well, that's a lot of work for only 14 trades. Well, then too many lots. Now you only need 20. Now you're almost done. So now you got your full Monty, and you know no matter what happens in the market, you're going to make 6%. Now, I've tried to tell you over the years that doesn't sound like a lot to an amateur trader, but to someone that wants very little risk and guaranteed income stream, that's almost enough. See, most institutional investors like endowments, they need to know you can practically guarantee them 8% a year. Okay? So that's the first part. 6% is pretty gosh darn good. Now, at that point, you will have, let's say, 20 trades open, or in this case, 14 trades open, of which 98% of your margin is available because all of these are profitable. Okay? So if you could catch something so dramatic and be in it for the course of years, you know, now you end up having, you could grow it is all I'm saying, right? Because you are mark to market. Now, the piece that's also missing in this equation is you have these pips, 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 you have... So there's also pips. So when you close your books at the end of the year, you're guaranteed 6%. By the way, if I think in the long-term historical average, the stock market only does 8% a year. So you're jumping pretty close to benchmark returns, right? That's just on interest only. Okay? So with pips, you'll probably find that at the end of the year, when you do your bookkeeping, you'll find that your actual return was 36%. Or even, 66%, depending on how many pips. And remember, your trading now doesn't determine how many pips. Only the trend, only the macro trend. You have no influence of where this is going. That's why you're not even interested in getting out. Okay? And then maybe at the end of the year, you say, okay, that was a good year. And then, right, you have an annual celebration called the moving of the stops. And everyone will gather around and children will giggle and scream and you'll lock in profit for the year. You're like, where should we move our stops? And you're like, I'm going to lock in this. 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 And this will still be at -3. And now all of these pips are yours forever, no matter what happens. If next year or in 10 years from now, this comes back and hits 16.5, pa-chow, 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 pa-chow. You liquidate, and all of a sudden, you'll be flush with those profits. But meanwhile, your big intent is no matter what you do, you're going to earn your 6%. Okay. Now, someone says, what if the swap is negative? Then it's not a carry trade. That's why we're doing this on ZAR. This is only something you do on a carry trade. Okay? So this would make no sense if it's negative. You're doing it exactly wrong. But that's cool. You've identified that, right, Rookie? If it's negative, you would never do a strategy like this because you're compounding your negative return. If you want that, why don't you just buy like a Portuguese 10-year T-note that guarantees you negative returns? Yeah. So anyways, it's a carry trade. What I just described to you is a carry trade. So one of the points that we're making here is as you approach this period where I'm like, okay, it's time to move the stops, which I just did. How much are you going to leave on for a January, February, March pullback? Okay, which would right? Which would take out this trade, this trade, this trade, this trade. So you're risking all these trades, right? So this is money on the table here. So one of the decisions you can make is move the stops on all these other ones to 1650, and anything below 1650 as you approach the end of the year, if you expect a big pullback in the first quarter, then you can cash out of these trades, take the pips, which means you lose the income, but you get the capital appreciation. And then you maintain capital appreciation and income of all your investments over 1650. Because the whole point of carry trading, right, is capital appreciation and income. Okay? which is another way of saying you're either shorting the dollar or you're buying the rand, whatever you believe in. Okay? On top of that, you're getting interest. So this is income. This is added to your account every single day. So the 6% I'm talking about is annualized on a daily basis. Okay? So, right? So if you took profit on all of this, you're giving up the income now. But you might have locked in 6 months worth of income. Actually, probably 16 years of income on these ones because, right, let's say you're giving up $1,000 worth of interest payments, but you just made $14,000 on pips. So you're like, I'm willing to do that. But you're trying to maintain the portfolio as much as possible. Okay. Okay. I've coached people that were making, tens of thousands of dollars a month on carry trades. Not pips, just interest. And it's a very interesting business model. What did you do today? Nothing. How much money did you make today? $1,000. Right? And I have a jet. Okay. Okay. So anyways, I set you up here, 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 here. So now it's all working out. Great. Very great. All right, so let's go to some yen pairs. Okay. So you can see on some of my trades, I've locked in 333, and other trades I've locked in 300. But you can see this, I could drag quite a bit more, right? But, right, you see that? Exactly 300 pips. So that's 333 pips locked in. Okay. You see what I mean? What happened to Adrian? Adrian made 1,000, lost 10,000. Oh my God. Risk management is probably the issue, Adrian. All of this volatility is Brexit, yes. So this was non-farm payrolls. Like, this is the craziness going on, right? I told you, the trading like pound yen in particular, I told you I don't like doing it under the pretext or pretense of Brexit. Like, it's not fundamental news, right? So I don't like it. This was all me. These trades, by the way, if you recall, were just me teaching you how to trade the election. That's all it was, and then showing that you can stay in these trades, right? Because many of you guys exited and then re-entered and exited and re-entered and probably are exiting again. And I just entered these the day after the election, and I haven't done anything since. I'm trying to show you that that there's other methodologies. I'm not suggesting this is the only way or the right way or my way is the right way. I'm just showing you, like, look, this is what we talked about and this is what happened. And inside of most of these pullbacks were predictable, but also letting it run was predictable. And I'm just trying to, eyes wide shut kind of thing, show you that there are multiple ways of doing this, but But I'm trying to educate and lead at the same time. There are many ways for you to manage your portfolios, and there are many different decisions to make. So which one do you want to do, right? So anyways, without fundamentals behind a currency, I don't really want to trade it, okay? But since we talked in here that we were going to buy this, right? Let's go through this again. Like we talked about this, which is the beginning of November. We already knew we intended to be up there somewhere. Remember, I didn't have a price target. I had a time target. That's why we're talking about time now. I'm locking in price because we're getting close to the time. Okay? So anyways, and I bought it here, right? Up, down, stabilize, 1, 2, 3, gone. Okay? Locked it then. Since that day, I moved my stop to -3 within 12 hours of the trade. Okay? It's been a month now. Okay? And this is an obvious exit. This is the obvious re-entry. Okay? This is nonsense. I hate stuff like this. Okay? But I only just now moved my stop because it seems like a bottom's been printed here. Okay? Also, this has 90% to do with the time. This is an issue of time. And we talked about that here, that I'm going to be in until a certain time. And that time is approaching fast. So I'm like, okay. So all these pairs have locked in. I think almost all of them. I think only one I've locked in 300 pips. This is the worst trade. All right. Okay. What do you think? Okay. Remember, I was saying stupid to trade here. I said at best, your luck will be 50-50. At worst, you're going to chase and be on multiple wrong trades. This is where bulls buy. This is where bears sell. If you did something different, you don't really understand what's going on. And you can get all mad at me and upset at me. I'm not trying to deliver this with malice or hate. I'm trying to reinforce proper trading habits. If you are a bull, this is as basic as it gets. And if you're a bear, this is as basic as it gets. You knew that days in advance. So if you're trading in here, I don't understand what you're doing, and I don't think you have a strategy. Now, if you were day trading inside of this, okay, so Moreno's like, she's a day trader. Great. Love that. If you're a bull, that's your first entry. And then somewhere in here, there was probably another bullish entry. After that, there probably wasn't a bullish entry. Because remember, a bull is thinking stuff like this, right? So this makes sense. And then it hits here and rejects, which makes sense. You buy the dip, 618 Fibonacci retracement on a daily pivot. Maybe, right? But we already played the psych level. So you got a second chance, okay? But here's how I look at it, and this is how we kind of analyzed it yesterday and the day before. The difference between what I would call the swing entry and then the second chance day trade is only 10 pips, so I wouldn't have done it. Because to me, this and this, it's the same damn trade. Like 10 pips different, 10 pips on an Aussie yen, right? So I'm like, yeah, okay, that's your second chance, but it's the same trade. Okay? But this happened at an exact moment in time that was predictable. Okay? So, cool. So now it's up here. Good. Right? I said yesterday, I don't think this is 50-50. I think it's 70-30. Do you guys remember that? 70% chance up. 30% chance down, only because I'm a macro trend trader. The macros haven't changed and the trend is still up. So I'm going to say it's 70-30. Can anybody confirm that? Okay, I'm just trying to have these lessons with you, these moments. So you should think of that. Why was this not 50-50 if we were dead in the middle? There's a trend behind it. There's macroeconomics behind it. This isn't a video game. There's reasons. You can reason, right? You must be a reasonable trader. You have to have reason. Okay? So anyways, so I said one of these traders will make money. The other one will not make money, but neither of them will lose. I want you to think about that too. Oh, did I wedge this one? So is this the one I did the apex? You sure? Michael says, plus the RBA meeting. Yeah, well, the interesting thing about that is they're all kind of one and the same. What you'll find is price and news move hand in hand because the price is based on that news. And by news, I mean the fundamentals. Like a central bank meeting isn't news, it's fundamental. So anyways, the closer to the apex, the more trustworthy the breakout. I don't think it was this one though, but whatever. Okay, I think it was more like that. Yep. Yeah, that's what I thought. I didn't think it was this one, but okay, cool. Euro. Okay, remember we're only approaching the mean. The trend is up here. Okay, so we're only at the mean, the trend mean. Okay, so what do I think? Am I freaking out about this? Well, we're basically at or near the average expected price. Okay, on the long run, in this scenario, we expect this to be the price. Okay. So we're up here. Should I freak out? No, not really, because that's what it's supposed to be. We're projecting. So I used to do this with sales teams, by the way. I used to project, sales targets for the month. So I'd sit down, I'd look at the performance of, 150 salespeople over the last, 8 months. And then I would project out and say, this is the target, okay? This is the target for January or something, right? That's like the minimal acceptable performance. And then I would do something like this and say, if the sales team produced this many sales in January, there's going to be a big bonus, right? There's going to be a party, there's going to be awards, right? Models and bottles, whatever. And you're going to say, I expect you to be here, but you potentially can be here. And if you can get here, great, you haven't been fired yet. And if you're up here, I'm going to fire everyone that didn't contribute to that, and I'm going to give a huge bonus to everyone that did contribute to that. And as a sales manager, I spent 2/3 of my time recruiting and training, and I spent the other third of the time empowering my best people, giving them leadership positions. Yeah, pizza. But what I'm trying to say is everything's just a data set. So should I be worried that we're approaching this? Well, no, that's where we're supposed to be. That's the minimal acceptable performance. Okay? Does that make sense? So you can do this for any data set that you're measuring. Cameron says, what are the general thoughts on taxes for Forex? Well, I only know America. And in the United States of America, they have a fantastic taxation system to Forex. But you have to have a good lawyer and a very good accountant. Okay? Because there's no tax code at the IRS for purposely, right, intending intending to profit from FX. There's tax code at the IRS if you accidentally make or lose money in your business because of Forex. Meaning, if you're Nike and you moved a whole bunch of money from subsidiaries around the world all the way home, and in that process, and then maybe reinvesting some of it back. So you're moving money around from all, 192 countries that Nike does business in, and you accidentally lost money doing it, or you accidentally made money doing it, then there's code for that. But what about a business that does it on purpose as their business? The IRS doesn't get it. And by the way, the guy auditing you or the girl auditing you, they can't even fathom. They're like your neighbor. You're trying to explain what you do, and they're like, wait, let me get this straight. What do you do again? Right? So the IRS people don't understand it. And there's no code for it. So now you have to have a good professional team. Okay? You have to have good lawyers, good accountants, good compliance people, right? And you need audit protection, so you have to have insurance for that. Because when the audit happens, your professional team will have to explain to the field auditor and their team how the IRS has treated such things in the past. In particular, a foreign exchange trader like yourself. So you're going to need to be incorporated. You need trader tax status, and you should probably be set up as some sort of fund, because then you can say, well, I'm a hedge fund. And they're like, oh, okay. And then they think of you differently all of a sudden because you're like, oh, I'm a hedge fund. Great. And then they just say, well, okay, you're a weirdo. You're doing complicated things. And okay. But what's supposed to end up happening, okay? What's supposed to end up happening is cash is the basis of your product and your service. Let's say product. So therefore, this equates to inventory. Okay? So you're actually taxed very, very well. Plus, you're a business now, right? So you get tax write-offs. Okay? So you write off all your expenses and whatever. Okay? You write off anything you possibly can. Okay? And so your effective tax rate is actually very, very low. Okay? Okay. Alex says, how do you choose data sets for measuring? That's the issue with statistics. So I brought up a point recently with the family. I think 2 weeks ago we went for a family hike, and we were walking through this path, and it was Thanksgiving. It was Thanksgiving, so we went for a Thanksgiving hike. And we're on the trail, and there's lots of hikers because everyone's on vacation, and entire families were walking. Everyone's got their dogs with them too. Okay? Lots and lots of dogs. About every third group had dog, right? So I said, well, according to research, right? Everybody in Georgia loves dogs and nobody likes cats. Because I've analyzed a data set taken at random. I popped myself 1 mile out onto a trail, sat there, measured the number of people, and maybe even asked them questions. Are you a dog person or a cat person? Turns out 87% of Georgians love dogs. They're not cat people. Well, that's not a good data set, though, isn't it? Well, it's random people walking past a random place on a random day, but not many people put collars on their cats and take them for a hike. So all I got were hikers in Georgia with dogs. So it's not a good sample set. But this is why the Democrats, for example, say there's a 90% chance everyone's going to vote for Biden. Right? And everybody's going to vote for Hillary. And then you find out, oh, snap. Biden won by 2 shakes of a lamb's tail, and Hillary got her ass whooped. And they're like, but the stats. Yeah, your data set sucked. You asked a bunch of Democrats if they were going to vote for Trump. And they're like, we're not going to vote for Trump. No kidding. Never ask somebody in spandex or a man with a ponytail if they're going to vote for Trump or anybody else, right? Like, you're not going to get a proper, you have to ask everybody everywhere to get a true sample size. And they're not able to do it. So for example, there's always a bias in any data set where, for example, people that answer surveys, right, are more likely to vote Democrat. Why? I don't know, but it's just like, you might find that the polls are wrong or not accurate. Maybe not wrong, but in this case, Biden won, but they said it was going to be a blue wave. Dude, it wasn't even a blue ripple. But their data was wrong because the type of person that answers a survey is the type of person that will vote for Democrats. But here's going back to this now. So this is what someone asked, well, how do you know what data set? You don't. You make a determination. Okay? So based on what you've measured, you have statistics. Okay? If I added this into the data set, it changes. But what I'm doing in my data set is from the moment in time this turned from bearish to bullish, I'm going to measure. Because I'm measuring the one standard deviation below the average, one standard deviation above the average. But you have to understand, I'm creating the standard deviation by the data set that I'm measuring. So I'm doing this with intent. I see this as the current uptrend. I don't need to measure the downtrend in my data set because I'm only looking for opportunities to buy. So if we get below 2 standard deviations from a positive sloping mean, well, then I don't want to be a bull anymore. You see that? Yeah, Alton says nobody admits voting for Trump. Yeah. Well, there's plenty of people in Georgia that voted for Trump. Okay, there's millions and millions of people just in Atlanta. Right? So there's many, many, many millions of people in the state of Georgia, and Biden won by 12,000 votes. Right? 0.1%. So, it's close, bro. Which means millions and millions of people did vote for Trump. Would they admit it? Yeah, people put their signs on their lawns. So, anyways, I know what you're saying though. You're not wrong. All right. So, anyways, there's so how do you know what data set or what sample size? You make a decision. What do you want to measure? Because remember, it's not making decisions for you. Right? So another way of doing this, it would be insert indicators, custom price action pivot points, and do you want to measure that? See? It's doing the same thing. What about this? Okay? This is the bottom now. The cool thing is, at this point, we knew this was 2 standard deviations already. And we're like, whoa, 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 that's oversold. Okay? 1 standard deviation, 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 and we're now, based on this data set, 1 standard deviation from the mean. On this data set, we're only at the mean. So then you have to say, well, where's the mean on the other one? Right? And probably somewhere in there. Project this out. Okay? So you can say, well, we are now 1 standard deviation from the big mean, and that, but we are in the upper quartile. So remember, y equals mx plus b. So we're looking at things like now the intercept, okay, between x and y axes. So now inside of all of this, you would do something like, what quadrant are we in? So now we're doing calculus. What quadrant are we in? And it actually wouldn't be the way I just drew it because of the positive. So let me try to redraw this. That might actually be, okay. So we're kind of like this, where this is a positive number and this is a positive number. So this quadrant that we're in is a double positive, which means it's statistically likely to continue, okay, if you will. You see that? Where we're in the upper end. So let's call this sort of, you're below the average, you're above the average, right? And then, but the average now with the M is positive, right? You see that? The M is positive. And so now we're like, with X and Y, where's the intercept? So where are we in this? And so the M is positive, right? So we got 1 positive inside of a positive quadrant. So you're probably, based on this data set, going to maintain where you are. So yes, it might come down a little bit here, but it probably, we don't know, but probably, based on the data set anyways, continue moving forward. Now, if you added this to the data set, it would change everything and probably be quite flat. So this is why you have to ask yourself, are you bullish or bearish on this? Because if you're a bear, you think this is a pullback and then there's going to be continuation down. That would influence your decision-making process. This doesn't make decisions for you. So if you're just managing this and saying, well, since summer, you expect to maintain an upward slope because somewhere in here, this is last summer, so we know this was a change in policy at the Fed. I mean, literally to the day we bottomed out on this pair. Okay? So you have to say, what is your alpha on this? And you're like, well, that's the day, by the way, I said I'd be bearish on the US dollar for 5 years. That's what's happened since, right? And now you're saying, based on this information, the next 6 months is going to look like this. Is that for sure going to happen? Well, nobody knows. But what's your alpha? Can you make that determination? Well, you can say, well, based on fundamental analysis and statistical analysis, you've made a decision here. Is that cool? Is that food for thought? Something cool to think about? Is it helpful? Would you click the like button, please? Since 66% of you have not clicked the like button, would you please take the time? Cool. Thank you. Knowledge bomb. Cool. So I don't know what the future is going to be like. So you're trying to decide, is this in the next, right? Okay. Where have you been, Reb? Now, I think another interesting thing to do, and we're not going to do it today, but now take this logical thought process and imagine you doing this for other investment asset classes. What kind of research do you do for real estate, for example? What kind of research would you do for stock indices or just stock picking? Right? So like I had a very, very good professor of real estate at Harvard. And the interesting thing is he was a fellow. He was a teaching fellow in my first finance class at Harvard. So I got to know him and he earned my respect very, very quickly. He earned teaching fellow of the year like 1 or 2 years in a row. By the way, that's a pretty good thing. He's a Harvard College grad and all that kind of stuff, but his passion isn't finance per se, it's real estate. So he did so well, got so many positive reviews, he became a professor and he started the real estate program at Harvard. So anyways, I took 2 or 3 of his classes, but he, being a professor is a part-time gig, right? He runs his own real estate firm. And I can tell you, his success is not luck. His success is he does better work and better research than all his competitors in the real estate market. And there's a lot of real estate competitors in commercial real estate, right? But he says things like when he goes to the bank to discuss mortgages or refinancing and stuff like that, financing or refinancing, he understands that there's a committee that must make a decision of yes or no. And he understands that the research that they need to do and the type of due diligence that's required for an investment committee to basically say, yes, we will give you $40 million. And what he does is their work. And he communicates beautifully. And he does all the work up front and provides them the information that he knows they're going to ask for, and then even more stuff that they might ask for in the future based on his knowledge of what they need to do to make an informed decision. And very often he says they will give him the financing, not because it's perfect for their model, but they appreciate working with him. And they're like, okay, he's good. We'll go with him. We will grant it. Maybe only 9 out of the 10 check boxes were checked, but because of how he does business, we will do that. Or how about this? When he's negotiating to buy a property, very often, even if he's not the highest bidder, they will pick him because of the work he does and because of how he does the work and all the preparation that goes into everything. And I think, imagine, taking what I'm showing you here in Forex, if you could apply that to other asset classes and investment strategies, I think our idea of a ridiculous, sickening work ethic being sort of the basis of what you do with a focus on value creation for your clients. Now, you might be your client now, but in 10 years you might have clients, or hopefully, because I think you're going to need to go through that process. But nonetheless, if your idea is a ridiculous, sickening work ethic focused on low risk, consistent returns and value creation, I think you could be successful in really any asset class. So if you take what I just showed you on this euro yen, I think you could trade the S&P 500. I think you could trade gold. I think you could trade Bitcoin. It's all the same. If you can't make a decision on where are we going in the next 2, 3, 4 months, I don't think you're going to be successful anywhere. And I think so if you might challenge me on that, okay? So let's say you challenge me on that. I think if you just picked a direction, flipped a coin, okay, you would do better than if you did not, because you know what you want to do. What is going on here, man? Must be a banker. Anyways, okay. Having the decision made means you don't look at your charts for answers. Margin call, yeah. You don't want to look to your charts for answers, and I think many people here need to retrain the mental side of the game, where it's so easy to fall back and make decisions because of the chart. Where I think it's better, and this is my opinion here, I think it's better to have made a decision, what I call an investment thesis or a bias. To me, there's both. There's bias and investment thesis, but they're very, very, very similar. From that, you then use scientific methodology to confirm whether this is a good time or price to enter your trade. You see? Much different. It's the same, but completely different. And I think, especially in the beginning, that will give you maybe only 30% of the opportunities to lose money, right? Because maybe 60% of the time you're like, I want to trade here, but I can't. And then you're like, whew, good thing I didn't trade because I would have sucked, right? But at the very least, in the beginning, it will create patience and discipline and consistency. And then 5, 10 years from now, you could be kicking butt, longing and shorting all over the place if that's what you want to do. But I think it's going to be very difficult to be that type of trader too if you have no patience and discipline. I mean, documented, patience and discipline. Like, not hypothetical patience and discipline. But if you want to day trade or scalp up in both ways, I know for a fact you can do that, and you can do it very well. And if you can do it very well, you'll make a ton of money. But you're probably not that good now. And by the way, 99% of people that think they can do that lose money. So I think you got to get the patience and discipline and the planning process put together. And you got to be hardcore on the technical analysis. Like, for example, if you don't know where the top is, how the hell can you be a scalper? I just like, you're like, well, Wayne, where are we going? What's the target? You don't know that? You can't be a scalper. Because a scalper makes money because they know that. You have to understand, half of scalping is entering trades where you know everyone is going to buy or sell, whatever. Everyone's going to enter. Therefore, you can scalp that because you know everyone's going to do it before they've even done it. But on the flip side, you then make money selling where you know everyone's going to take profit, or buying where everyone's going to take profit, right? So you're always entering trades where you know other people are going to do things. But if you're mediocre at technical analysis, there's no chance. It's mental to think you could do that consistently over long periods of time. It's insane. So I would start on understanding market behavior, market structure, price action, all these different things that go into it, and then developing internal strength and fortitude, mentally, psychologically, and maybe even physically, because sitting in your chair 20 hours a day is a bitch. But I think you can do whatever you want once you got those skills. And you could kick butt in Forex, you can kick butt on gold and oil and Bitcoin and stock indices and all that kind of stuff. And now you got this big brain, you got this internal confidence back through. You could be probably the world's greatest real estate investor. Why? Because you have all the skills that are required to beat 95% of the people every time. Right? Remember what I said the other day. If you know 95% of people, retail Forex traders lose money, then it should be easy to beat them. You understand that? Like, all you have to do is beat 95% of people that create mediocrity. I think you can do this. But you can't act, right? She trades in mediocre ways, oh. It's not all right, it's not all right, it's not all right. She trades in mediocre ways, oh. You've been living underground, eating from a can. Been running away because you don't understand trades. Right? Like, you just can't be mediocre ever. Because then you're part of the 95%, right? Right? Oh my God. But I'll never forget when I read that, gee whiz, 20 years ago. I remember being really fascinated by Forex. And it was like a secret club back then. So I was really interested. It was secretive. It was opaque. I'm like, oh my God, I'm a foreign exchange arbitrager, right? And I remember reading that 95% of people failed at it. I'm like, awesome. Really? Because what I was doing as a high-tech entrepreneur in the Silicon Valley, both as the entrepreneur and the investor, it was way harder than that. I thought I was going from a 99% failure rate to 95% failure rate. Put it this way. I went from a 1% chance of success to a 4% chance of success, or 5% chance of success. So my success rate, my potential went up 500%. I'm like, oh snap. But then you have to ask yourself, oh my God, well, now, if I was successful, is there any money in it? And I'm like, well, at the time, it's almost $2 trillion a day in turnover. Right? I don't even know, what is that on an annual basis? I don't even know what's after trillion. What is it, a 10 quadrillion, bajillion Google market per year? So I'm like, oh, snap. My potential success rate goes up 500%. In a bagillion dollar market, annual market. Like, oh, snap. So you should have seen me quit my job. You should have seen me do it. They're like, dude, we just made you vice president of the firm. Yeah, F you. I'm a currency trader now. Piss off. I didn't quite word it that way. But, like, right? You take this VC job and shove it. I ain't working here no more, right? Mama, don't let your babies grow up to be VCs, right? They're like, this is a weird song for you to sing at our at our holiday party, right? I saw something funny the other day on YouTube where a guy gets a phone call and it's his venture capitalist, and the VC says, I have an emergency, and he's like, what's going on? And he's like, I have a board meeting and I can't find my Patagonia fleece vest. Look at this. Hey, it's not fleece and it doesn't say Patagonia, but I thought that was really funny. He's like, I don't know what to do. I can't find my Patagonia fleece vest. What am I going to do? I can't go to the board meeting. He's like, first of all, you don't have to have a fleece vest. All right, I digress. But that's how we got here, guys. I think we are discussing day after day after day universal truths. Okay. All right, so let's go. I guess we got to do some dollar pairs. I don't think we did dollar yet. No, we did not. There's that ugly pig. Ugly pig. Nasty ugly pig. So this one is 333 pips. Locked in, worst case scenario. Trying to give her another week or so if I can. Right? You see that? Well, I guess I should expand on this. Right? Trying to give it another week or so. Okay? So right now, what I'm thinking in my mind is I either make 2,000 pips profit or 3,000 pips profit. Okay? Do we got more juice? Well, what did we talk about yesterday and the day before? What are the sort of known unknowns? Brexit goes better than anticipated 2 days ago. And then stimulus package. But do you remember? I said the stimulus package won't happen until next week. I talked about that yesterday or the day before. There's a deadline before that, by the way. They're like, we have to make a decision. Their decision is going to be not make a decision. But again, I think we talked about that yesterday or the day before. So there's a line in the sand. They're approaching it any day now, and then they're going to decide to not decide, and they're going to push it to next week because they're going to then the Fed's going to do their thing, and then I think the Friday after the Fed meeting, which is the 18th, they get serious about actually doing it. Now, I said last week even that this package is not stimulus. It's aid. When someone says, dude, I feel sorry about your situation. Would you like to borrow some money? I'm like, dude, I don't want to borrow money if I'm in a bad situation. Right? Like, that's not stimulus. Like, well, if you need to borrow money, we're here for you. I need some potatoes. Right? So, P.T. Barnum in 1850 wrote in his book, when a man is starving, he doesn't need prayers, he needs potatoes. Okay? And I thought, wow, that's cool. So, if you own a restaurant, and the restaurant, and by the way, this is happening now, right now in New York City. Probably today or tomorrow, New York City is going to announce, if you own a restaurant, you are required by law to shut down. So what are you going to do? You own the restaurant. What are you going to do? Tell everyone to go home. Go home. Everybody go home. So you shut down. You're not earning any money. And by the way, you were willing to do what it takes to stay alive. You're like, we'll find a way. Even if I'm only earning 5% revenue, I'll do whatever it takes. At least I can pay my rent, or at least I can keep my staff floating. Even if at least I can do something. But then the government comes in and says, well, shut that shit down. Lock your doors. You're like, but I'm willing to hustle to make this work. Shut them down. And then they're like, oh, by the way, would you like to borrow some money? Borrow some money? Right? That's not aid. I mean, that's not stimulus. Okay? So now what? If it's stimulus, they need to give those people money. The waitresses, the cooks, the dishwashers, and the owners should get a check. Why? The government forced to shut them down. At least China has the decency to say, get the hell off this land. You're not a farmer anymore. But by the way, we'll give you a ton of money and you can move over here and then you can get free education and your children get re-educated. You could retire and so on and so forth. I heard that's how China does it, right? But in America, if they're like, shut this restaurant down, you're not allowed to employ people or provide a service to people, then you need to pay them money. You took away their cash flow. You devalued their asset as a government program. So there needs to be money if we're going to call this a stimulus package. And by the way, why am I harping on this? Because if I'm going to make money from a growing economy, which is what one of the things I'm trying to do, then I need to see the money. I need to see the cash. You need a cash, not loans. Not grants. Well, we'll grant you this. No. Give me money because my waitress needs to get paid so she can buy groceries. Right? So she can pay for Netflix, for crying out loud. So I need that because then that money gets spent. And what happens? Okay, let's keep this focused. Remember, I don't have opinions. Okay, I don't have opinions. Okay. GDP equals C plus I plus G, right? Plus exports minus imports. Okay, so you give a bunch of grants, G goes up, but not by much because they're loans. But maybe because of that, you get a little bit of this, but it's not really that good. And then ultimately it pushes up debt, okay? What you need to do, because by the way, if the government gives a low interest loan to business to invest, that might take, 3 months? Or whatever they do, you understand? Like, it's slow. So when you look at the velocity of the change, like it does eventually enter the economy. But, right, in economics, we have short run and long run. Right? Short run variables change or don't change. No, in short run variables change, long run they don't change, and all this kind of stuff. So we're interested in like, when does the money hit? You give people free money on the C, and what do? They buy groceries. It's not a lot of money. Okay? Whether it's $600 or $1,200, it's not a lot of money, but they're going to spend it, especially if they don't have jobs. Now, yes, the downside is you give it to a bunch of rich people too, but what did I do with my free money? I spent it. I gave it to people that offered me a service. I gave it to waitresses and people that sell slushies. I gave it to the hotel. I gave it to the restaurant owners. I gave it to the race car track. Okay? I spread it out. My God, I must have spread out my stimulus package to, I'd say at least 100 people. When I think of all the little breakfast places we went and the cafes and the lunch places we went to, and the places we went for fun, and the hotels. I mean, I spread it over all kinds of people. Okay? My daughter got her hand painted with a henna tattoo, right? That kind of stuff. Like, boom, that person made money. And then they paid their rent and so on and so forth. So I did my job, and that's what will stimulate that quickly, right? So if there's free money attached to this, then it's not aid. The free money is stimulus because, I mean, maybe we would have done that Florida trip in June anyways. I mean, but it was easier to do it with free money, you see? So the government gave me free money, and I gave that money to 100 other people. Because when I spend money, it's someone else's income. So now they have income. So if you give people grants, it's not the same. And the velocity of it impacting. Now, the other thing I want to talk about is like the next couple of years. Let's call this, I'll just make it GDP. GDP star. This is potential GDP. Okay? And then we'll do an actual GDP. And it typically goes like this. And now we're in this period here. I believe we're in a trough, but the stock market's at an all-time high. Okay? So this gap is the focus for my investment thesis right now for the next several years. And this production gap, like we can do this here, it's productivity gap, productivity gap. Okay? This is the basis now of my investment thesis for the next probably 8 years. Okay? Well, and Michael, what I'm explaining is why the Dow is there or how the Dow is getting there. Okay? And what we talked about a couple of months ago in this period, right? Because I drew something similar, 2-3 months ago, and I called this the reset. You guys remember this? And I drew all this out. I did something similar, almost word for word, I'm sure, because it's just logic, right? So we had something like this, GDP, and we had GDP star potential, and then we called this one, you always have to label it GDP, actual. We'll call that prime. GDP prime versus GDP star, okay? This was the reset, and now what I'm interested in is our ability over the next couple of years to fill the productivity gap. Okay? And from that, I'm going to invest into real estate, stocks, Forex. So like I'm plowing, I've been, since April, plowing lots of money, right, into the stock market through, well, not me, but I'm funding my accounts. Okay, for it and all that kind of stuff. And if I didn't have an opinion on this productivity cap, then I wouldn't know where we were going to be in 6 years. Do you see all that? So Michael says, Wayne, you said that in 24, 25, all cycles, and well, I've never said that. This idea of all cycles intersect, well, if I said something that alluded to that, I didn't say it that way. But the issue right now is the reset. So we have to understand whether we've done a reset or not. Okay? Now, typically you have a recession. I did say that? Okay, I apologize. That doesn't sound like my language. All the cycles intersect. And I don't say crash either. It's not typically my language. But anyway, so I said something to allude to that or something in that effect. Well, it's still going to be based on I have at least 5 years, right? Well, but see, so Michael, look at it this way. We may have reset the business cycle, and we may have reset the political cycle. So, that wouldn't be a 4-year move. Okay, that would be longer than 4 years. And inside of that, there was real estate. Now, the real estate is actually a little bit of a conundrum because COVID messes things up. So, for example, when it comes to the economy, typically a business cycle reset occurs in a recession. Well, we didn't have a recession. We had an exogenous shock. But the effects are the same. The stock market dropped by 30%. That's kind of what we needed. So now you just simply buy at the bottom and you're golden, right? We also typically run into recession when interest rates are too high. Well, interest rates, what were they, like 2%? And we dropped them all the way to 0. So there was a reset there. So if this is a business cycle reset, then this influences other things as well, right? And now, when you're going from a trough to potential, you're filling a gap. So let me explain this differently. So let's say potential GDP is 2.5%. Okay? And we are below that. But we had this big negative number. So next year, and by the way, 6 months ago, I explained this, that we're going to have 6% GDP next year. But that doesn't get us, because we're the actual, if you didn't look at it on a percentage basis, that doesn't even get us back to potential. Okay? So we got to get above that. So now I'm thinking 2022. So let's measure this. If 2022, I guess that's 20. Let's redo it. Okay. So if in 2022, GDP is, let's say, back to 2.5%, we will probably be close to GDP star, potential GDP. Okay, so let's redraw this. Okay, so I zoomed in a little bit. So we're here now. There's the productivity gap. And we get back to here in 2022. And then we continue the cycle up for an unknown period of time. Then what starts to happen here? Does anyone want to take a guess? Sorry, I'm well trained to have to do this. GDP prime, GDP star. Well, we don't care about inflation. We care about something else. Big news? No. It's similar to standard deviation, but not really, because what we're measuring is productivity. But you could probably look at that, but there's something else going on that impacts, using standard central banking policies, impacts this cycle. Interest rates go up. Thank you. So now little I goes up in here. What happens to the stock market? In 2023, 2024, as interest rates rise from near zero to somewhere. See, your answer here will dictate your behavior. Okay? And if you don't know, you're going to need to join the live group or something because you need to know this stuff. Okay? And I can tell you, most of you guys are wrong. You're going to lose money. So, the answer is the stock market's going to go up. And if you don't understand that, you need some more help. Join FX Bootcamp. Get going. Okay? Okay? We talked about this, I don't know, 3 weeks ago. No, four weeks ago. We talked about this in the live trading group, in the swing trading group. We talked about this, and I showed. We went through charts that I downloaded for, I think it was the Kansas City Fed, and I went through on using the Fed database. Went through all the interest rates and went through all the stock market stuff. And the amazing thing is everything you've been taught is wrong. Taught in school. I mean, if you have an economics background, you've been taught wrong. But I can fix you. So anyways, yeah, the stock market will go up. So this is what I'm literally planning out 2025, 2026. Okay? Okay, I am making decisions based on this knowledge. So a couple of months ago, we were asking about, is it the Great Reset? Now I'm looking at filling the productivity gap. Okay, productivity gap should get us back above potential GDP because we've spent the trillions of dollars. And once we're above GDP, interest rates need to rise. And now I have this runway laid way out. I have this runway way out in front. I have lots of room to run here. Okay? Okay? Well, for the noobs, look, go to youtube.com/FXBootcamp. There's thousands and thousands and thousands of videos. You understand that? Like, all for free. There's a free training course there. So if you don't know what a moving average is, go there. Right? If you don't know what pivot points are, go there. Now, I highly recommend you join FX Bootcamp because one of the things, there's the original FX Bootcamp training course that's going through moving averages, support and resistance, pitchforks, price action, pivot point. I think I said that one. Fibonacci. There's so much there in the original FX Bootcamp inside of FX Bootcamp. So, but you might say that because I'm whatever. That's cool, Barry. I didn't know you were in that part of the world. No, but I didn't know you were in that part of Florida. Actually, I didn't. I don't think I knew you were in Florida in general, but that part of Florida. But like a great place to start. Let's go here. Okay. 1, 2, 3, and 4. I would start there.
Good day, everyone. Grab a seat, make yourself comfortable.
Yeah,
this is a presentation for the Daily FX audience entitled How to Improve the Timing of Your Trades. And to do so, we are going to use moving averages. Now, this presentation is going to be part PowerPoint, but also part live data. See, what I don't want to do is bore you with perfect slide examples of charts from the perfect world that makes me look smart because they fit my theories just perfectly. What I'm going to outline are the strategies that I use as a professional trader.
See, back then, guys, webinars were new. This is older than YouTube. But this idea that you can show live charts, not just a PowerPoint, was actually a very, very new thing. People are like, oh my God. You're going to show me PowerPoints and your charts, and the charts are going to be moving and stuff? I'm like, yeah, it's radical. Okay. So, anyways, I'd start here, right? Because it's pretty detailed.
Like 2155. Now, for price action, or what I call momentum, we look at the 5, 8 EMA, and the 8 is an SMA, but again, you don't have to get too focused on that. It doesn't really matter. I'm using short-term moving averages. That's all that matters. They cross a lot because they're measuring things in the short term. For trend, I use 200 EMA. We're not going to talk about that today. Is showing you a moving average of 21 candles, and the 55 EMA is a moving average of 55 candles. So you know what? On some days, you'll find that this may only cross once or twice, okay, which is great. I use the 2155 if I'm swing trading. See, ideally, you can get in near the top of the market, ride it all day, and then get out at the bottom of the market. Well, that's where, literally, if you're getting in at the top and out at the bottom, that's the market, right? That's what you're trading, the market. You don't need to be concerned with price in that situation, that you're trading the market. So that's how I measure market action. And now price action, remember, it's short term. I call it momentum, in the moment. What is price doing now? And for that, stronger. Okay, so again, if the 5-8 is dropping straight down, there's a good separation between the moving averages. You should be confident in the moment that the price is falling, and well, you certainly don't want to go long. Okay. Okay. So again, market action. What thing I look for? I say to myself, Wayne, what direction is the market today? Well, look, over here we have a 2155 cross. It looks like it happened yesterday or so. Nice, 2155 cross to the
163.60. 163.5. 163.5. $163.5. We were right here. I'm like, hey, it's bearish. Wait, but that was 2008, huh? Oh, look at this. Wow, what? We were here. 2008. We were right here. Thing is, I remember doing this stuff. I guess I can't even fit this anymore. I remember being up here. I mean, I remember this, guys. This is 2007, 2006, 2005. Yeah, I remember riding this up for years. Okay? And then I did it on pound yen. I did it on pound yen, but it worked the same way. I described in advance at the 2007 conference in Barcelona, Spain. So we were right in here. I was explaining 3 months in advance why the pound was going to drop thousands and thousands and thousands. Like I said, 5,000 pips. So 2.1, 1,000, 2,000, all right, 2,000. 3,000, 4,000, 5,000, 6,000, 7,000. So it drops 7,000 pips, but I predicted 5,000. Pretty funny, huh? Just wondering if any of that.
All right. Good morning, everybody. Good evening. Good afternoon.
Wonder if any of that is out here. Have to go way back, huh? Way back. Oh, it's not in order. What? Why would it not give it to me in order? And of course, YouTube won't let me sort it. Oh, the arrogant Google pricks. Oh, it's all about our search. Oh, sort this in alphabetical order. Oh, I can't do that. So I guess, what was it called? Internationals Trader Conference? ITC, I think it was called. There we go. Yeah, that was the day. Boris Schlossberg, Booker. Just trying to get a date. That's what I'm looking for. Wasn't that year? I don't remember Ed being there. It was Boris and Booker. That Tiffany Hammond video, I think, was the right date. Steve Ward, I don't remember Steve. That's not right because we were facing a different direction. Dude, Pegler went there? I forgot about that. Forgot about that. Yeah, I paid for Pegler to go. I've totally forgot about that. All right, I'm just trying to find a date. That's all. Sorry. Wonder if it'll do ITC Wayne. I'm just trying to find a date for that. There's some good stuff here. Here's Pegler doing one on timing. I'm gonna go back and watch that one.
All right, guys. Morning, all. So, thank you, Kandi.
You're such a nice guy.
I've got a short presentation for you, then I'll just throw it out to the floor and you can talk about any questions you have. I'm going to give you kind of an abbreviated version of what I threw out at ITC this year, and then we'll go from there and we can discuss whatever you want.
Cool. He's such a nice guy. Nicest guy in the world, that guy. All right. Okay. So I still can't find it. Live trading. So it was before 2012. So I was 2007. I can't even find. How about 2007? I'm trying to find a date of the panel discussion where I broke it down. And ITC March 17th, 2010.
Good morning, everybody. Are we ready to get started?
No. Anyway, sorry. Oh! Ed Pond, no. I'll have to look it up. I want to know the exact day. Dude, Rob Booker's just on. They totally promoted Rob, huh? Holy smokes. None of my stuff's on there. Anyway, so I don't know. I thought it'd be cool to get a date. I wanted to get the exact date, but we talked about it 3 months in advance. And anyways, dropped like a ton of bricks. So you'll have to trust me on that. Cool. Now I get to watch David Pegler's video on price action from 12 years ago. Looks good. Yeah, what did happen to the jet guy? Was that right, Ron? Yeah. Such a great guy. Naveen, do I ever talk? Never. Never Naveen. I don't even know his last name or what he does. But anyways, the basis of this move is the 3-month bill. That was the whole basis of the trade. Right here. We talked about this would create this and then that. And it was based on the 3-month T-bill. Cool. So anyways, just hanging with you guys. Yeah, I don't know anything about JetBoy. It tells me, though, how scary this industry can be, though. Like, if it's true that they were doing a managed program, or I guess not even a managed program, they were doing a copy trade, and now they're being sued for $137 million. What was it that they were doing? Because if you followed them, it's your own damn fault. It wouldn't be their fault. Oh, is that what it is, Michael? My video was older than that. Yeah. So what would they have been doing for it to be a fraud? I mean, losing money is not right. I mean, losing money is not a crime. I suppose it shows why I would never want to be a money manager in the United States anymore. Now, of course, if they're flat out lying, then yes, then that would be fraud. But I'm just trying to think of what they would have been doing. Well, see, you can't say things like that. Well, at least in Forex, you can't say stuff like that. I used to get really mad because the National Futures Association would give me all the rules. I have this huge booklet of rules. I took classes in Chicago about what you can say, what you can't say. And it's very, 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 very strict. And then I'd open up, I remember back then, because now we're talking about, what, 2007, 2008, 2009. Back then, I still read newspapers. So I'd get the Investor Business Daily, and there were full-page ads on how to get rich quick. All you had to do was buy this course, and you'd be filthy, stinking rich, right? And then they had, like, testimonials, because, you know, NFA would never allow me to have a testimonial because that past performance is predicting future results. So if someone said, I love it, I made all this money, well, now you're predicting future results, and the NFA would never let me do that. But a full-page ad in Investor Business Daily, like if I just paid money and took the stock course, I'd get filthy stinking rich, and then they'd have like 20 testimonials. I made my $10,000 back in the first day. And I'm like, oh my God, it was so blatant, just sales crap. And I'm like, how come I can't do that? Not that I wanted to, but I can't even have a testimonial. Yet alone a bunch of them saying that they made a whole bunch of money. Well, I can't, even if I could have a testimonial, they'll say, well, you can't do past performance. You can't offer, even if it's a client's real experience, you can't have your client say that. They can just say it's a quality service. I liked it. But I couldn't even have that. It was so stringent that I remember after taking a class at the NFA headquarters in Chicago, I remember, because we went over what you could say in an email, what you can say in a newsletter, what you can say in an advertisement. And then I had that experience where I fought with the NFA because I ran that ad that said, don't trade on a demo account. And they're like, you can't, right? Where I said, you should trade on a demo account. And the NFA says, you can't say that. I'm like, no, I'm telling people that don't know how to trade on a demo account so that they don't lose money. And they're like, you can't say that. You cannot tell people to trade on a demo account. I'm like, why? I'm protecting them. They're like, well, you're saying if they're successful on a demo account, they'll be successful on a live account because they've practiced. And they're like, you can't say that. You're predicting future results from past performance. So like, I can't even say anything. And then other people could take out full page ads, get rich quick, buy this options course. You'll make a boatload of money. I made 500% return in only 3 months, right? Like, oh my God. So as a Forex trader, I can't work in this country. It's impossible. Like literally, it's impossible. You would have to be an institutional investor where someone rolls over $100 million your way and all that kind of stuff. But running a fund for non-accredited investors or something, never in a million years would you do that here. Right? Right now, YouTube won't even allow me to advertise Forex.Today because it's related to Forex. Just because it's Forex, they won't let me advertise it. But then all the ads, Jet Boy's running on top, says that you can be financially independent doing 1 trade a week. You see what I mean? I can't advertise Forex. And he can come in and advertise on top of me, where Google makes money, saying that if you take his option course, you might have a private jet. Isn't that interesting? Yeah. So I have nothing against the NFA, but to run a small Forex fund in the United States, I don't think you can be profitable. And that obviously would protect most clients. Americans wouldn't be able to invest because there won't be anyone willing to do it. So now if they were doing some sort of copy service, right? Right, there's a lot of things that can go into it. So if you're trading real money on as a, what do you call it? Like you're a signal provider on a copy service. and you're trading real money, the NFA wants you to have hypothetical performance disclosures. So you can, like for example, I've been in trouble because I used real money disclosures. And I'm like, well, I'm trading real money. And they're like, well, you can't do that. You have to have a hypothetical disclosure. But what do you mean hypothetical? It's real money. Yeah, but it's not. I mean, it is. It's real money. That's a real account. I'm putting real money in the market. You're like, well, you're using the wrong disclosure. Fine. What was it? What would they call it? Deficiency. Wrong disclosure document. Deficiency. I'm like, it's real money. You can't call that real money. It is real money and a real thing. Right? It's just really, oh my God. That was such an interesting chapter of my life. You imagine just getting battles and battles and battles, and they're like, yes, you're using a disclaimer. Yes, it's alerting all your customers to risk, but you're using the wrong one, so you owe us $20,000 right now. I'm like, what? Amazing. Have fun with it, by the way. Oh, thank you, Henry. Let's flip over, watch the kitty cat. So it's just part of that process, guys, being managed and regulated and all that kind of stuff. Being a manager that's regulated, it's tough, man. And you better be prepared is all I'm saying. Luckily, I can get you through that. So I go back to like, what was Jet Boy doing? What would he be doing for fraud? Because that's a pretty big claim. Yeah, Michael's like, don't trade on a demo because the logic of that is BS. Yeah, I mean, I had voice actors, and I had to rehire the voice actor to go back and redo it so that we didn't warn people. Isn't that funny? I think it cost me thousands and thousands and thousands and thousands of dollars to redo that. And I guess this is the one with the disclaimer. I don't remember where it is. We have such great content. It's crazy how good this is. Kurt Worley's analysis is just fantastic, both technically and fundamentally. Look at all this stuff. Put so much time into the videos. Must be a playlist. Yeah, this was great.
Warning, trading Forex is a highly attractive objective, but there are...
Yeah, my speakers lag.
Warning, trading Forex is a highly attractive objective, but there are great risks. Acquire strategies and tactics before you begin. Your first mission, should you choose to accept it, is to attend an upcoming online seminar. I've uploaded the details.
Roger that. How to trade Forex with Fibonacci Studies, Thursday, June 10th at 8 p.m. Eastern. Got it. Registering now at fxbootcamp.com/TV.
One final warning, Forex is risky and your trading account could self-destruct.
So, I think that's the revised one. So, warning, wait, what do I say here? I think it just says be careful, right? What does it actually say?
Forex is risky and your trading... One final warning, Forex is risky and your trading account could self-destruct.
Yeah, that's the revised version. So I said something like, don't trade real money until you've practiced on it, something like that, right? And they wouldn't allow me to do it. So that's the re-recording. One final warning, Forex is risky. I'm allowed to say that. And your trading account could self-destruct. That was the compromise. Because what we did here is we just re-recorded the voices. Son of a gun. We re-recorded the voices, but I didn't want to take this out. So it was like, practice on a demo or or something, right? And I had to take that out. I had to take out the don't trade real money until you've practiced on a demo or your account could self-destruct, something like that. And I had to redo it. That's such a badass commercial. Yeah, it was just, I was doing a lot those days, right? I had a huge payroll. I think I spent probably $200,000, maybe $300,000 a year going to conferences. My PR firm was $25,000 a month retainer. I was doing commercials and stuff. I was just having fun. Those are great years, 2007, 2008, 2009, 2010. Because you have to understand, when you go back to that pound, or do we still have that chart? No. When you go back to periods like this, and you're like, yeah, this is going to drop thousands of pips. Yeah, those are good years. I mean, dude, right? I had tax bills. Right? I had tax bills. So all of a sudden you're like, how much is the... So what I did, like, there were times when I'd go to the Traders Expo people, and I'm like, I will buy booth space for every trade show for all of next year, but I need to do it now. So they're like, well, that's, $280,000. I'm like, boom, tax write-off. But we had so much fun doing those things, right? So that's just part of being a trader. All right. And another reason you should incorporate. So here's the big question, right? This is really going to get interesting. So I might start moving this even further and faster. And boy, Can we check gold? Okay. Yeah, I forgot to do commodities. Sorry about that. So oil now tickling 46, which is good, right? Looking good, doing its thing. Remember all the pieces that go into this? This is the best price you can hope for the week. So I know you bought it there, right? Now, the issue is it's difficult on the way down, but you got to know where your Alamo is. Okay? You got to know your Alamo. And then we're looking at this now. We're probably on our way to 48.5 to 49 maybe, which generally speaking, we're just on our way to 50. Okay. Cool. Now, we talked a lot about OPEC meeting and all this going into this, the OPEC plus one. We talked a lot about this. One of the things you can get from the EIA, which one's the American one? I can never remember this. Energy Information Agency. I guess it's EIA is the American government. EIA, Energy Information Administration, I think is it. They'll tell you not just crude oil, but they'll also tell you gasoline. Petrol, if you're not from North America. All right, so if petrol is going up, if the quantity, if the stockpile of gasoline is going up, what does this tell us? And don't say that there's more gasoline in storage. Yes, read into it. What does this tell us economically? Hey, Sinan, you should join FX Bootcamp and join our live group. Okay, I'm about to exit on that, right? So day trading into it now for me is too much risk because I got 1,000 pips profit on it. So I got to. You're asking the right question at the wrong time. Okay. Oh, you actually got the chart. Thank you, Michael. Bonus points for Michael. Let's see if we can bring it up. Is it the current week though? Crude oil. So that's okay. So we always do crude oil, right? So we're still above. But what I want is not crude. I want gas. That's what I'm getting to. Gasoline now, not crude. So this is what we normally do. So this is just normal, right? So you should know where we are. And by the way, this whole normalization is where I'm getting us to buy oil. So that trade's done. We've been doing that for months now. What I want is gasoline. Distillates, gasoline. There we go. All right. That's price. Okay. Price just means down. Great. What you want to look at is stockpiles. Gasoline. Okay. See how focused I am here? What do you notice over the last few weeks? So let me ask you something too. Are you paying attention to this kind of detail? Where like I can talk about gasoline stocks over the last 2 weeks and then pull up a government agency website. And by the way, thank you for making that available, Michael. And then being able to quickly say, see, look. Okay. What this is telling us is we're not traveling as much as the refineries expected. And let me tell you, refineries are pretty good at doing this because refineries buy the crude, right? So refineries buy crude and they turn it into gasoline. And so they're very good at predicting the future because they've been doing it forever. And it will cost them billions of dollars to get this wrong. So they're like, what the? Okay. So first of all, it's going up, which would lead you to believe that prices are going to stay in this trend downward. But check it out. It's not unusual for that to happen this time of year. Okay. So we always have to look at the convergence and divergence of historical averages because we want to know if this rise in inventory has something to do with less people driving, less things being delivered, less people going to work. Okay. The gray area is your historical norms. Okay. So there's more than normal, so gasoline prices will stay low. What does that mean to inflation? Yeah, we're getting there, Michael. What does it mean for inflation? if gasoline prices will remain low. Okay. Is there a need for the Fed to raise interest rates if gasoline prices are falling? Okay. Now, right now I want you to look at where we are, the blue line, relative to the gray area. Okay? If we're above the gray area, gasoline prices will be low. If we're in the middle, they'll be stable. And if we're below, they will rise. So, do you believe gasoline could represent a reasonable canary in the coal mine? Yes or no? Could you use this data to help you form some sort of macro, meaning macro for the US, macroeconomic indicator? It will help you predict prices. So if supply falls, price goes up. Why did it fall? Is there a hurricane, so supply is low? Well, that would do it. But what if demand picks up? More people driving to work, more Amazon deliveries, more, right now, I know it's not gasoline, but leading into that demand could be things like more people traveling on planes. Well, they need jet fuel, not gasoline. But what happens? You Uber to the airport, then you buy a bunch of overpriced, poorly made food, and then you get to wherever you're going, and then you jump in your second Uber, and you drive to the hotel, and you buy some more overpriced, mediocre food. Right? You're spending money, which is someone else's income, and they take that income and they spend it. Okay? Which is someone else's income. And you get the improvement or increase in the velocity of money. How many times a dollar is traded? From me to you, to her, to him, and back to me. Okay? So this could be, you want to look at demand and supply. Okay? You want to look at demand and supply. And both of them kind of lead to this. Now, obviously, we want a supply issue is an exogenous shock, meaning these refiners know how much gas to make. It's not like they get it wrong and they didn't produce enough gas. There has to be like a hurricane shuts down the Gulf of Mexico. There's a terrorist attack on the Alaska pipeline. Canada refuses to do business with the United States. There's unrest in the Middle East. There's a trade war. There's something going on to supply, but we got all of this together. You typically, this whole business is such big business that we got all that put together. Now, so the real thing is demand. Okay? If demand is low, that's poor economic activity, and you know how to trade that. If demand increases, right, then that's positive economic activity, and you know how to trade that. The issue is, where are we and where are we going? So if we do like this, and historically we're like this, oil prices are going up, inflation's going to go up. Okay? Why? Because, yes, typically supply does go up. Okay? Okay, supply typically goes up, but we're less than economic norms. So like, for example, with real estate, the real estate cycle looks like this. And in this situation, rent is not going up. In this situation, rent is going up. And even here, rent is still going up. So we're looking at, like, you have to kind of break it down, like where you are in the historic cycle and at what point does prices start to go up on gasoline, and it'd be in a point like this. okay, when you cross over. And then you have to say, well, what's the behavior of this? Why does this happen every year? Well, because this is peak oil demand right in here, okay? And so there's buildup, okay? There's buildup. So we build up from the end of the year to the mid part of the year, and then we draw it down. And then we build it up, and then we draw it down. Then we build it up, then we draw it down. Okay? So you have to look at these crossovers, normal, abnormal, right? Prices are low, normal, prices are low, 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 normal, but okay, we're still above, and we want to look at a crossover. So you can try to predict gasoline prices, or instead of gasoline prices, this is stock, this is inventory, but you know the crossover will affect price, which means there's higher than expected demand. So there's demand prime versus demand star. So, you know, when one is higher than the other, like the productivity gap, right? You fill that productivity gap, you go above potential, then your prices go up. So you want to look at all these things. And does that mean economic activity has gone up? Is demand increased by an improvement? Are we past the shutdowns? Is 2021 going to be better than 20? Is 2022 going to be better than 20? So, right? So is it increase in economic activity that made this crossover from above 5-year average to inside to below 5-year average, pushing up gasoline prices because of increase in economic activity, which is an increase in inflation? And right now, we know the Fed says in 3 years they hope to be 2.5% to 3%. And at that point, we will know we are at potential GDP. The productivity gap will be filled. And now, from then, interest rates will rise from 0 to about 2. They'll let it run at 3, which means that'll take another 3 years after that. And now you have my 6-year outlook. Because at that point, the stock market will continue to be rising year after year after year after year after year after year. And then the Fed will stop raising interest rates because our potential GDP and our actual GDP will now look like this. I'll redraw it the way I had it before. So we were here. There's the reset. Here's the gap. But I'm talking about being up here now, and our potential GDP is well below our actual GDP. Inflation will be high. Interest rates will be high. And the business cycle will now reset here. So that's the big decision I told you I was making 3 months ago. And now I'm in sort of a productivity gap analysis, which would then tell me where we are in the cycle. What do you think of that? And so I got 2,000 pips locked in, and I'm sitting on 2,200 pips in open orders. And I'm hoping to make 3,000 pips and then get that up another 800 pips for the week and then exit, or it'll all collapse on me and I'll be done for the year. And I explained earlier why next week is influencing me lock in those 2,000 pips. But anyways. Cool, right? It's amazing how so many of you people don't like those conversations. I love it. So yes, I am trying to make investment decisions for myself and for my family looking 6 years in advance. Okay? Cool. All right. Well, thank you for being on my team. Thank you for being part of the community. Thank you for being a client to Trader's Way. If you're not a client to Traders Way, visit tradersway.com and at least open up a demo account and give them an opportunity to earn your loyalty and respect. That's all. That's all I'm asking for. Give them an opportunity. And with that, I will see you tomorrow. Thank you for being a subscriber here. Thank you for being a subscriber at youtube.com/FXBootcamp. If you want to learn more about technical analysis, fundamental analysis, trader psychology, so on and so forth, you need to become a member of our FX Bootcamp community. And I'd say probably half the people here are part of that community. So what's holding you back? Cool. Hey, made up. Thank you for that. Goes into the cigar fund. What do I need to change my thesis? Well, the data won't support my thesis. I have to use scientific methodology. So, for example, inventories go higher and higher and higher, and prices go lower and lower, and obviously something's not working in the economy. Cool. So anyways, thank you, y'all. You're good people. I'm glad to have you in my life. Peace on earth. May the pips be with you. May our profits be above average. And I'll see you guys tomorrow. Cheers.